So a couple weeks ago in our video, we talked about this bull market continuing on, and who doesn't love a bull market? You've got the Fed, the Powell put, you've got the president doing everything he can to keep this up before elections. You've got a market that just wants to go higher. I really just don't... What is this guy talking about over here? Bull market? Have you seen the charts? There's no market. Well, I guess everybody doesn't agree with me. No, stay tuned. We're going to give the bull and the bear case. Hello, this is Michael Loftus, and welcome to Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click more for additional information and notes on today's video. Also, if you're looking for a different opinion, that of Wall Street and Big TV, please do consider subscribing. So today we're going to talk about the bull, the bear case, but is this a classic melt up? So our agenda today, we're going to give the big charts, show a bullish side. We're going to go through Treasuries, what keeps me up at night, that's the bearish side, tweets of the week, and what's on my radar. Let's go to the big charts. All right, first up, S&P daily chart. What do we see, if anything, different? Well, when you look at a classic melt up, you have a surge, check. Then you have a slow grind higher. That's exactly what we're seeing right now. Now, below the scenes, if we take a look here, we've got the VIX, the volatility index, continues to kind of hang in there, 13.5. You know, we haven't seen a surge up or down, so really that keeps me in that neutral stance. The next thing that I'm looking at below is momentum. When you look at momentum, it's been flat, right? We're not seeing a lot of volume. And then the last thing is relative strength, right? RSI, the difference is I'm using a 5-day indicator versus a 14. And you can see we're way overbought right there on the short term. So one of the reasons why right now I continue to be neutral, and I'm surely not going to add on the S&P at this point. Because remember, big markets get driven by smalls and mids, not just large cap growth. No change here. I'm going to say neutral as well. Why? This is your weekly view. I'm still seeing that pattern. Nothing changes my mind right there. We have not had that big breakthrough yet on that. So again, I stay neutral on the midterm. And then the long-term chart, which is going to be your monthly, we're close, but we're not there yet. So a couple things. One, we're looking for that momentum. It's getting real close to a crossover, but has not happened yet, right? Here's all of our QEs, Powell put times 3. Okay, so when you look at that, things look pretty good. But again, I continue to talk about relative strength here. It's showing a negative divergence, high, lower, high, lower, high. So we're still negative. So we're neutral, neutral, negative right now. Difficult to put new money to work. Next up, behind the scenes, I just want to show two quick things, right? Here's your S&P. Obviously, when you look at that, we've had the big golden cross there. That is obviously very positive. Then I've got a couple charts to show the overall strength of the market. I'm looking at advanced declines here, and you can see across the board, right? Kind of have a series of lower highs. You see them right there. And when you look at that, advance versus decline percentage, it's been okay. So we're not seeing a big push. The next thing is highs minus low percent. Same thing. We're kind of hanging out there at the 10. You know, it's not a big surge. Here you look for a surge above 30, which is right there at the beginning of the year. And ever since then, it's kind of just been meandering along. Now, a good sign, on the 200-day, you got 76% of companies above that. So that is a good sign of those overall charts. So the next thing is, here's a new one I look at. I mean, I look at it every day, but I'm showing for the first time. It's the put-call ratio. When it gets above 1, okay, what that means is you're starting to see people put more of a hedge on. All right, obviously, here's going back to last December. We had a spike, and then a huge spike. Now, we've had one here, so here we are above 1. Going to continue to watch that. Basically, we're at all-time highs, and when you look overall, you got your institutional traders starting to hedge. Okay, so let's look at the final part of the bull case here. Trump calls on Fed to cut rates by 1% and urges more QE. Are you kidding me? Got a great print today on unemployment. We should be raising rates. This is ridiculous. And you want to define what I'll call irony? How about this? Going back to 2011, then not President Trump. The Fed's reckless policies of low interest rate, flooding the market with dollar needs to be stopped, or we will face record inflation, and that is from 9/20/9/11. We've got the Powell put. I mean, they are flooding the market, continue to do so, and you're going to see it right here. White line, money supply. Money continues to flow in this market, and guess what? The money flows, the market will follow. All right, pretty simple. So now let's go to Treasuries. What do we see here? Now, a couple things. All right, I had mentioned last video going into this quarter, we cut our Treasury position in half, which at that time worked out well because we hit a low and then we went back up almost to 260 and we're trending down. I did not add, I still have 5% there, but again, right, there's your high, lower high, lower high, lower high, and let's see, I think we go back to 235. So the 10-year continues to tell us something different. So from there, when we look at things, let's move up, our yield spreads have actually gotten better, 0.24, so not much change there. The only thing is our 2-year is getting close to getting down to another low. So we have to continue to watch that. Next up, what keeps me up at night? All right, so what keeps me up at night? You would think not the GDP number because it was so good. Our friends at Edge-Eye, as always, good cartoons here. China, US, my phony numbers are better than yours. The big mystery in the GDP report, where did the inventory come from? Okay, when you look at GDP, we spiked, we started going down. We were looking for a 250 number. By the way, it was real, okay? The one thing we talk about here is the truth.
All I'm offering is the truth.
The numbers don't lie, okay? They use a factor of growth minus an inflator, okay? Well, inflation's running 160 right now, and they only used a 0.61, meaning the government, meaning Larry Kudlow, who's attached to whose hip? You know who, right? So they inflated that number by 1%. We should have been at 2.21. Don't be fooled by that. Europe, Germany, really slow growth, 1/3 of production out there. We got to be careful about that one. And then how about this? U.S. budget deficit is expanded even without a recession, and this is a first. Got to continue to watch that one. Next and last, most importantly, I've been talking about this, earnings. Lots of numbers going on here, going back to Q116, okay? Now, when you look at what's going on, we know that companies were restating. So they came out and then they basically came out with a projection 11% lower, okay, on earnings and growth. Well, of course they're hitting their numbers because they lowered projections. It's a joke. But again, numbers don't lie, okay? 290 companies through yesterday have reported sales growth, 3.2%. Earnings growth, 1.36%. 24, 12, 1. That is going towards an earnings recession. Remember, when you buy that company at $10 a share and earnings go down, it goes from a multiple, and I'm just big numbers here, the multiple is going to be way higher for the same company when the earnings go down. This is real news. Next up, we have tweets of the week. let's take a look. New to our lineup, Tavi Costa, hopefully I'm saying his name right, U.S. stocks near record levels, but the rest of the world continues to form lower highs. Can't make that up. The facts don't lie, folks. Next, this is what I talked about. Lance Roberts, one of our best follows. Again, links below to all of these. It's incredible that CNBC, fake news, is crediting the rally to strong earnings when estimates were lowered by 11% so companies could beat them. Corporate profits, which strips out share buybacks, tells the real story. You're darn right it does. We're slowing. Danielle Martino Booth, we talk about her all the time. Great follow. Perfect storm. For every 1 penny increase, a gallon of gas, it's effectively a $1.2 billion tax on households. Already at an effective $66 billion tax. Think about that. Are you not feeling at the pump in the grocery store? Yes, we are seeing inflation. All right, so on my radar, don't forget as we went into this quarter, we already had the S&P, or in this case, we had large cap growth as part of our portfolio. I'm going to focus on a few sectors. The first one is oil. We made a big move here going into the fourth quarter. We doubled our position, setting up nicely for a golden cross here. I like that. Had a little bit of a pullback last week when Trump talked about OPEC and trying to pump out more reserves, but we're back under 30 on the VIX on oil. Continue to like oil. When you like these sectors, you buy on the dip, okay? And that's what we did for some new clients. The next one was a new sector as we went into this quarter. Really like this sector, communications, which is, yes, traditional communications companies, but also subscription-based tech companies. What do I see here that I like? There is your golden cross, right? So we got in here at the beginning of April. We've had a real nice bump up. Not surprised to see a little pullback after such a run-up. That's relative strength. We went from overbought to now we got a little bit of little more movement on the upside. So communications so far has worked out very well in this quarter. The last one I'm going to talk about is healthcare. Healthcare took a big hit last couple weeks. Why? Hashtag BS. Now stop it. Not what you're thinking. BS means Bernie Sanders. And when you look at this, we've gone down because Bernie Sanders went on Fox at one of these town halls and talked about Medicare for all, and the Fox audience cheered. Okay, so took a big hit, calmed down a couple clients, great buying opportunity, and we have come back nicely, and we still have some room to run. Most importantly, we're about 14 times earnings right now on the healthcare sector, so do like that going forward. Wrapping things up, let's go to fear and greed. Okay, as I said, our signals, too neutral. Short term, just not going to buy at these levels, folks. Midterm, neutral, but real close to breaking out. And still negative on the monthly chart. Fear and greed, we've come back from a 74 to 68. Not surprising based on what's happening. As always, thanks for watching. Michael Loftus, Wealth and Wisdom TV.